Welcome back to the second half of the Future Show here on the TD Ameritrade Network. We're less than 60 minutes away from the cash open for stocks here in the U.S., and we just had some closely watched economic data release. Let's take a look at PPI traders. We had producer price index numbers, inflation data, and the Fed's dialed in on this, so we should be as well. Let's pull up those numbers, which actually missed expectations on the core and PPI across the board. If we could take a look at the PPI number, traders, we had PPI, which came in for the core, as you can see. Well, let's dive into the PPI first, which came in at 1.1% on the year-to-year. That was below the estimated 1.2. Prior was 1.1. PPI minus food and energy, you can see again coming in. Well, let's take a look at the core numbers here. As you can see, core PPI came in, traders, down 0.2% versus a 0.2% estimate, and year over year it looks like it came in at 1.3% below the 1.6% estimated. Traders, I want to head on over to the floor of the CME Group to bring in Alan Nuckman. He's the Chief Market Strategist at Agora Financial. Alan, let's talk PPI. Thanks for joining us here. Your thoughts, for the most part, inflation just is something that we cannot find no matter how hard we look, it seems like.
Yeah, they just can't spark it. They can't get it to go. Once you get the fire moving, the fire going, it's easy to fuel it, but they just can't get the spark. Essentially unchanged, not a concern at all. That 10 years ago, that's all that people used to talk. The fear of an inflationary inflation coming back in a big way. It's been a long time. My philosophy of, I think the internet's kind of equalized everything, and that's kept prices down across the world because there's that price discovery process.
Yeah, it seems to be a different dynamic right now, to say the least. Let's talk a little bit about the Fed yesterday. They commented a few things that stood out to me, Alan. Business investment slowing, it seems like, or continues to be below what they'd like it to see. They commented on how household spending continues to be strong, very tight labor market. Talk to us about what stood out to you in terms of Fed Chair Jerome Powell's comments.
Well, we all knew yesterday was going to be a nothing day. So it was important to see, or to try and read, the tea leaves and what they're projecting for the future. Most important to me was the fact that they said that 2020, there looks like there's going to be no action. Now, they've already used a couple of their bullets, obviously, as far as rate cuts. The repo market we'll come back to in a second. But looking at the Fed Fund futures and looking at the CME FedWatch tool, there's still a 20% chance of a cut in March. So that hasn't been eliminated. Now, it was 30-some%, coming into yesterday, but there's still a 20% chance. That's not a zero. So there are, there is that possibility. Again, we'll talk about the dollar index, and the dollar index is drifting in at that 97 level, or very close to break. And if it can break, then we're going to have a lot of fun in some other markets.
Yeah, it's interesting because we're seeing some movement in commodities right now. You look at gold right now; it's spiking back up to that 1490 level. Speaking of commodities, energies, Saudi Arabia, the Aramco IPO this week, attracting a lot of attention. It looks like overnight yesterday they got up above that $2 trillion mark.
Right.
There's a lot of concerns about this deal in terms of some of the retail investment. Foreign investment is not a possibility. Talk to us about the
7%. But let's talk about last week, because that's very important. In the macro picture, because for me it all comes back to the macro market, you saw that crude oil move last week, which was great, coinciding with the comeback that we saw in stocks. Stocks last week got within, 3 points in the S&P of the all-time forever highs that we had the day before Thanksgiving. So there was a big comeback in stocks, but also importantly, as a sign of stability, there was a big the crude move where we're knocking on 60, and we also had rates move up last week. So stability signs everywhere. And like I said, I use crude oil as a barometer of the overall sentiment in the macro market, and it hasn't played ball until recently. So now we're starting to see a move up. Now, this is a market that's traded between 55 and 60 recently for the last couple of months, I guess, and in the bigger picture between 50 and 60. So the 55 level is an easy level to lean on, and the 60 level is a ceiling that we've got to push through. So let's see how it reacts once it gets through. But like I said, the catalyst for that can be the dollar index. To get back to Saudi Aramco, it is just an incredible coincidence that I think we talked about many weeks before, many months before, that most likely the interests for that, we're going to see some support for crude oil, and that's what happened. I don't know what kind of levers they can pull, but it worked. I think more importantly than the crude market right now is you're seeing some of the underlying forgotten stocks in that sector starting to form bottoms and starting to move higher. Schlumberger, Halliburton, and COP have all had some good bottoms and some nice moves up. So I think there's some equal opportunities in the underlying energy stocks equally as in the crude. Now, crude, you know, being long, you're anticipating it to get through 60, and that will be your confirmation. So we'll have to wait and see. But like we talked the last time, we saw the British pound break out, and we were looking for the euro currency to follow. So let's see if the dollar index can move down below that 97. That should be the catalyst for crude and a lot of other resource, commodities and stocks to have their bullish bounce.
Yeah, I agree. We've been seeing a much more inverse correlation coming into play recently. I've got a crude dollar chart up here right now I'm looking at, and we can see that playing out as crude's rallied the last couple of weeks. The dollar's come off, and certainly we've seen that in gold over the last couple of weeks. Alan, you mentioned some of the stability signs we're seeing everywhere. Certainly in terms of the labor market here in the U.S., we're seeing signs of stability. We actually had jobless claims this morning come out with the PPI number. If we could just pull that number up, I wanted to get your thoughts on it because we heard from the Fed yesterday. They actually think that unemployment could continue to go lower. We thought that we were, again, at a fully employed labor market here. Take a look at the new jobless claims, Alan, 252,000, a little bit higher than the estimated 213, certainly higher than prior 203, but we like to take a look at the 4-week moving average. It helps kind of remove some of that noise you were talking about. 224,000 is what we got there. Alan, one thing I'm talking and thinking about again is inflation and getting back to the PPI number, but tying it into the labor market. You mentioned, again, some of the changes in terms of the internet and how that's, changed the grand scheme effect that could spark some inflation is just not present. I keep thinking energy markets are going to be the epicenter for that spark in inflation. Do you agree?
We'll have to see, but I think what you're getting to is that, you know, the demand for employees, and it's hard to find good employees in this labor force. They're not properly trained, and that's the big issue. So if the labor force has to be paid more, can that be the inflation spark? We've been looking for that for years now. And when you talk about the labor force, this is a trend that's not just new. I mean, this has been going on now for almost a decade, the job situation. And how does that spill over to energy markets? Are the energy markets going to be another catalyst for inflation? Even a breakout of this 50-60 range, what does that target? Target 70 in crude. We were at 70 in crude not so long ago, here in 2018. So I don't see that as an inflationary force to drive the market. I don't know what it's going to take to get inflation on the move once again. But again, it's a careful thing. With a fire, you want to make sure that it's contained. You want to get it started. You want to have the fuel for it. But then you have to make sure that it's always contained, and fire is a dangerous force, as is inflation.
Yeah, Alan, you actually bring up a good point. I'm looking at the chart here again. We had 76.90 into the end of last year, but yet inflation wasn't. Maybe we need above 100 and sustain to see that play out. Certainly that would impact things, you would think. Traders, this is Alan Nuckman. He's the Chief Market Strategist at Agora Financial. Alan, a great breakdown. Really appreciate you joining us here talking eco data and energies. I want to stick with the commodities and some of the movement we've been seeing in reaction to that weaker dollar. I want to begin with the metals. I want to begin with the gold bid that we saw in reaction to the Fed, and then the spike we just saw up to